Good morning, everybody, and welcome to the Volatility Report. This is holiday week, last week of the year, 2015, and the market is off, it looks like, on a little bit of a rally. Why? Because we didn't crack up yesterday? Anyway, events. Pretty soon, you're going to be able to push the event page, and you're going to find our next Saturday webinar on fixing broken positions. Also, too, if you have any questions about our simple catalog besides our mentoring services and our option pit chat room and strategy letter and things like that. But if you just want to learn something about volatility, how to trade calendars the right way, any of that stuff, go to our store. And with that, let's take a look at just a couple of the things. Mark, do you want to pop on, or I'll just keep going until we're done? Okay, so market up today. I don't know why. Europe is a little stronger. Oil's rallying a little bit, and of course that makes everybody happy. It's almost like things are sort of, treasuries finally yields going up a little bit. Finally, VIX going down below 16 now. Finally kind of giving up whatever volatility we had with the weekend effect last week. Look for them to take VIX a little lower and some of the juice to come out again. Today's Tuesday, Friday's off, so they're going to start depressing it without any real ugliness in the market. Again, I think 14 probably will be the low. If we see a low tick, that would be about as low as I think volatility can go. The next piece of the puzzle we have is where are the VIX futures, right? So again, this is slightly delayed data here. Even though we're looking at Jan Feb, we still have the Jan at 17 and 64, which is pretty high for January, just with the holiday coming in. So I mean, there is definitely room for these futures to come down. I think Feb, not in a too unordinary place, $2 over the Jan, but the $2 over cash. But Jan futures are still, I'm just going to say they feel pricey by about, I don't know, around 60 cents. So I think the magic number for us is watching those futures drop below 17, and that would lead some of, the worries about oil, things like that, that sort of these lingering doubts. We need to see future sellers kind of whack them down a little bit. But we have a pretty, what we'll just say, normal contango term structure. To us, that means certain types of trades. So Mark will probably be looking at the volatility products a little bit today in the chat room. It also might be, I think, a chance to scoop some if the premium is starting to come in here in HYG. There hasn't been a lot of recovery here. Like we talked about yesterday a little bit, the TLT, considering the interest rate trajectory affects, both these products in similar ways. The appetite for high yields is way, way lower relative to what it is for TLT. If you notice, like, the high yield bonds, they peaked, a year and a half ago. TLT is actually, regular treasuries are still, they haven't given it up yet. So there's still that appetite for protection, and it has not totally gone away yet. Not by any stretch of the imagination. Hard to believe that TLT was near 100 2 years ago. Okay, so, and this is in the face of QE and the taper and the end of QE and now raising rates, and we still aren't back to there. So there's still something going on, right? Because it's certainly affected the high yield market, and the Treasury still looks like the safe haven play, which to me generally means there should be a little bit more volatility in the product than we would expect. Right now, it's about the lowest volatility it's been in a year. I think relative to it being a safe haven product, that may be a part of the problem. So, yeah, Mark will be looking at those a little bit. We've had some already TLT ideas. And with that, we will see you all. I wouldn't be surprised if volatility, if the market kind of continues what this arc is today, we could see, another 25, 30 cents lower in the VIX futures. And then January looks kind of poised to fall apart a little bit. With VIX January expiration, don't forget, is an extra week, which could be that could be a lingering 20 or 30 cents in the contract. But for the most part, if the cash starts to fall, you should see the future start to fall. And that looks like for the week. Other than that, whatever rally we have today could probably be just as easily given away tomorrow, because that's sort of how it's been since last week. All right, everybody. The new world of rising interest rates is still, the market has still not decided what to do with it yet. As for today, though, it looks like it wants to close the year slightly positive. All right, everybody, you have a good day.